Today's podcast includes commentary from a guest speaker. Neither the RIA Compliance Collective nor RIA Compliance Concepts is affiliated with the speaker or the company he or she represents.
Hello, everyone. The Clarifying Custody podcast that we did with Rick Wilkens ran a little bit longer than we expected, so we decided it would be best to create a two-part series. Without further ado, here's part one of Clarifying Custody.
Whether your advisory firm has 1 or 5 people, compliance will always be an issue. RIA Compliance Concepts is more than just another service provider. We truly care about seeing our clients prosper. That's why we started our podcast, the RIA Compliance Collective, providing up-to-date compliance guidance. We're passionate about doing our job so you can focus on doing your job. We understand regulatory compliance like the back of our hands, from full-service RIA registration to annual compliance reviews and everything in between. We're here to get you there.
Welcome, everyone, to the RIA Compliance Collective. I am your host, Ivan Barreto. We have a special treat today. We've mentioned in previous podcasts and discussed bits and pieces about the custody guidelines and custody rules for RIAs. In this podcast, we're going to do a deeper dive and a wealth of information from a subject matter expert on custody. Before we get started, I have my co-host, Colin O'Brien, with us today. How are you doing, Colin?
Excellent. How about yourself, Ivan?
I'm good. It's Friday, obviously, so I'm ready for the weekend. It's been a busy, pretty hectic week. So with that being said, I would like to introduce Rick Wilkens, CPA and a CVA, is a partner of DeMarco, Sciaccotta, Wilkens, and Dunleavy, LLP since 2010. From 2008 to 2010, Rick served as the CFO of a family-owned $600 million frozen seafood importer and distributor. Prior to being the CFO, he was a partner in a large regional public accounting firm. He has been in public accounting since 1986. His focus nowadays is an emphasis on working with and servicing broker-dealer and RIA firms, hedge funds, and privately held businesses. The firm's financial services practice consists of approximately 100 clients that are based in the United States, Canada, Ireland, and the United Kingdom. He also is certified in business valuations. Rick graduated from DePaul University as a Strobel Scholar and is an active member of the AICPA and the Illinois CPA Society and the National Association of Certified Valuation Analysts. Rick, thank you so much for taking part in our podcast today. How are you?
Oh, good. Very good. Thank you, Ivan and Colin, for inviting me to join you in today's cast.
Hey, no, it's a pleasure. So obviously we work in the same circles. We specialize in RIA firms that we provide compliance consulting services for. And one of the things that always comes up is discussions about custody. And it's great to have you on the podcast so you can.
Thank you.
We can do a really deep dive on custody so our general audience and our RIA audience can be better informed about custody guidelines. With that being said, can you elaborate just a little bit on what the rule is for custody?
Sure, I'll go through that. What we typically see in this area is clients will come to us, or prospective clients will come to us for guidance on if it is custody or if it isn't. And so some of the rules get a little technical. Some are very specific to what is and what isn't. And then there's also some things in between. So we try to interpret some of that and help folks determine if they need to have these surprise audit exams or not. So basically, the rule is 2064-2, and I promise not to talk in rule code too much. Under the Advisor Act of 1940, there were some adopted amendments back in 2009, actually, that came into play and effective in 2010. There are 4 main additions to this amendment. And one of the areas, obviously, that we're just going to cover today on this is the surprise examination piece. Basically, it was designed to provide additional safeguards under the Advisors Act when a registered advisor has custody of client funds or securities. And that's where it comes into play, right? What does custody of client funds and securities mean? And we'll get into that, into examples, I hope, through some of the questions today. Basically, the rule states that all advisors that have custody of client assets need to undergo an annual surprise examination by an independent public accountant to verify the client assets. The firm, the public accounting firm, needs to be registered with the Public Company Accounting Oversight Board, PCAOB. And there's really no exceptions to this rule specifically, but there's certain cases where you will not have to have a surprise exam done. And that's what we'll cover, those and those that you also need to have the surprise exams done.
And when are investment advisors subject to the rule and to surprise examination?
They're subject to the rule when they have custody of client assets, regardless of the dollar amount. That's always a question we receive too, is, I think I have custody, but it's only, $10,000. So does it really count? Well, it does count. There is no limit or range of dollars in the dollar amount for custody. Those that have custody are subject to the annual surprise exam, just of those assets, by an independent public accounting firm, like I mentioned before. And basically, you're only subject to the surprise exam for the accounts that you have custody of. So if you have 300 clients and there's only 10 that you have custody of, those are the only 10 that get tested. We don't look, and we're not required to look at the other 290 to say if you have custody or not. We're just determining on the 10 that you provide us that you have custody, that's the testing that we do. There are some exceptions to that. If the advisor has custody solely because you have the authority to deduct your advisory fees, then you are not subject to the surprise exam. Or if you're an advisor to a pooled investment vehicle that's subject to an annual financial statement audit, that's a separate rule. That's part of the new four amendments that I mentioned earlier. If you're subject to that standard, that audit of an annual financial statement, then you are not subject to the surprise exam. You're kind of doing things twice then, so it doesn't really make sense. The audit of the pooled investment vehicle is a lot more work and a lot more fees, but typically those need to be completed because it might be in the operating agreement, for the investors that investors need it. So at least you're covering that. You have to pay for that part of the annual exam, but you're not paying for the surprise because one covers the other. The overall objective is to verify that the client funds and securities, which an investment advisor has custody, are held by a qualified custodian. These are the things that we test as we go through our exam. That the advisor has custody are held by a qualified custodian in separate accounts for each client under that client's name, or in accounts that contain only the client's funds and securities under the advisor's name as agent or trustee for the clients. Back in 2015, this is the most current information I could find on this, but in 2015, it was estimated that 1/3 of RIAs were failing to comply with the custody rule simply because they just didn't realize that they had custody. So we'll cover some of those pieces where you might be thinking, well, maybe I do once I hear this, or know for sure that I don't. One of the things we hear is, I use Schwab, I use Fidelity, I use TD Ameritrade, so I don't have custody, they do. That alone is not a safe harbor, and we'll get into some specifics on that later, and also ways to mitigate that so you don't have to do the surprise exam. Obviously, that's what we do. We do a lot of audits and for broker dealers, we just work for RIAs, but we certainly don't want to have someone go through the monetary pain of a surprise exam when you don't need to, if there's ways to mitigate it. So we could help somebody out with that as well. The RIA is subject to penalty and suspension for not filing. That's a question we always get, what's going to happen? And penalties have varied. There's really nothing specific on what those are. It could be, depending on the scope of it, it could be, let's just get these things in order. And some are definitely monetary fines.
Now for a short break.
DSWD, a PCAOB registered CPA firm, your RIA experts specializing in surprise custody exams. To learn more, visit www.dscpagroup.com or call 708-489-1680.
And now, back to the podcast.
Let's just get these things in order. And some are definitely monetary fines.
Yeah, there is a lot of questions out there regarding custody and everything. When it comes to surprise exams and an advisor is looking at engaging a CPA firm, what do they need to look at has to be covered as far as the custody rule goes?
Sure. Thanks, Colin. Yeah, it's, again, the firm itself that you're selecting to do this needs to be registered with the PCAOB. So there are a number of firms out there for that. You could actually go to the PCAOB website and find firms there. but they definitely need to be part of that and registered with the PCOB. And you, the advisor, needs to obtain, for the surprise exam, you need to enter into written agreement with the independent public accounting firm, an engagement letter, for instance. And there's certain things that need to be covered in that engagement letter besides like kind of the process and the things that we would do. And some of those pieces that need to be in that engagement letter are that, it needs to contain a provision that require the accountant to notify the commission actually within 1 business day of finding any material discrepancy during the course of the examination. So you as the advisor knows that we do find something that is big. We have 1 day to let them know. We, the firm, submit the form ADVE to the commission with our accountant certificate, let's call that, within 120 days of the time chosen by us, the accountants, for the surprise exam. So if we choose April 30th as a surprise exam date, we have 120 days to complete that and get that filed on the ADVE. And we do that for the companies. We're required to do that for the advisors. They're also in that engagement letter must provide that, upon resignation or dismissal, that the accountant, needs to submit within 4 business days a statement regarding the termination and, why it was and what happened. And like at the very end of the engagement itself, once the report is complete, we actually go right onto the site and submit the filing electronically. It used to be a paper copy. Now it's electronic.
Right. I have a fairly recent event where I had a client that was looking at saying, okay, Colin, how do we file this ADVE? We don't.
Right. Yeah.
That is the accounting firm.
Right.
And we need to really discuss, and we hear questions all the time about this. What is actual custody? It has been debated and talked about, and we still get questions to this day, even though that definition was amended 9 years ago.
Right.
It still seems to be a hot topic, and it still seems to be something that we need to discuss with our clients on a regular basis. And I was wondering if you could possibly clear the air and provide some examples.
Yeah. I don't know about clearing the air. I may muddy it a little bit, but we'll try because we do get those same questions. And as time has passed, these 9 years, the definitions become a little stronger, and the exceptions, might become the rules now and so forth. So we will address some of that now that I can help with. Basically, the advisor has custody if the advisor holds directly or indirectly. The indirectly part is really where a lot of the questions come in. If they directly or indirectly have the client funds or securities, or has any authority to obtain possession of them, that alone means, we might cover it later as well. So if you have a client and you have access to their account, like even a 401k account, let's say, and you have their sign in and password for their account, that is custody. Even if you don't use it, if you have it, you have custody. The amendments to the rule revised the definition of custody under the rule to specifically include a definition of custody arrangements where an advisor's related person has custody of client assets in connection with the advisory services the advisor provides to clients. It's really a longer definition, but as an example of that, if an affiliated broker-dealer of an investment advisor maintains custody of the client assets, even though it's a qualified custodian in connection with the advisory services, the investment advisor has custody of those assets because of that related party piece with the affiliated broker-dealer and the advisor. It really isn't a clear break. So that is definitely something that would be applicable to the surprise exam. As I mentioned before, the advisors that only have access through fee deduction for collecting their fees, they are not subject to the surprise exam. So that's clear and cut, dry. That's it.
They have a definition of custody, but there's that exemption that the SEC lays out.
Yes, exactly. Right. Advisors with enhanced custody, which is the ability to withdraw funds beyond the fee deduction, such as somebody who's got a trusteeship or your power of attorney, you are subject to the exam. You're subject to having the exam. Advisors with enhanced custody using an affiliated qualified custodian, like we mentioned, the related broker-dealer, is subject to the exam unless, here's another piece, unless in that you have custody of a related person, an actual person that you're related to through attribution, then no surprise exam is required. So there's where some of that definition comes in when we have these exams and we go to a client and say, give us the list of the clients that you have custody. They may or may not understand some of this, but I guess the more information you give, the better. And we can then help determine if it's even something we need to test for custody or not. If the advisor actually has physical custody, boom, that's easy. You're required to do the exam or have the exam. Again, advisors to pooled investment vehicles, I've covered that already, that you don't have to. The surprise exam does not apply if you are issuing audited statements. I believe that's also within 120 days, though, of the end of the year, whatever the year end is. And again, having website IDs and passwords, like I mentioned, that is custody as well.
Yeah. Interesting.
Yeah, and that's the thing that we had to relate to our clients that they weren't aware of, that having people's logins to log into their 401k accounts, that is
Right.
a custody issue.
That's a custody issue. I had a client or a potential client call me in to discuss this custody piece, and all they wanted to do as a service to their clients was to be able to pay their quarterly estimated income tax. That's all they wanted to do.
Oh, wow.
So it was, not an argument, it was a discussion. He goes, I don't really have, I'm doing this as a service. I said, well, unfortunately, it's custody. And then there's the cost of the surprise exam. And is the cost of the surprise exam worth the service to the client? I don't know what they ended up doing. I know we haven't gotten a surprise exam from them, but I don't know if he ended up not providing that, service. You're trying to serve your clients and you can get handcuffed by this.
Yeah, and that you're exactly right, because we've had clients in the past before, be approached to be trustee or of their estate and whatnot. Mm-hmm. And I tell them you can do it. You just have to take on the burden of doing a custody audit. Now you have to weigh the benefits, the cost and benefits of doing that. And, depending on who you work with, it could be quite, expensive and whatnot. So
exactly. And, the cost of the surprise exams, it varies on the number of accounts that you have custody.
Thank you for listening to the RIA Compliance Collective. Your support is greatly appreciated. If you want to experience the RIA Compliance Concepts difference yourself, visit RIACC.io. From mock audits to customized compliance procedures, ongoing compliance assistance, and beyond. We're here for you always. Keep listening to discover more on how you can keep your advisory firm compliant so you can focus on achieving your goals. RIA Compliance Concepts. We're here to get you there.